Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Thursday, September 18th. The euro traded all over the place last night, moving in a range of approximately 260 pips from the start of the Asian session. Volatile movement was seen during the European session after the coordinated liquidity injections were announced. The euro gained strongly after 1300 as strains in the credit market worsened. There were no economic releases from the eurozone this morning. The 4-hour chart shows that the euro still has not signaled a long just yet. The pair shows major resistance in the 1.4560 area. The pound traded mixed during the overnight session, trading in a range of almost 200 pips. The upside resistance was formed by the high of the previous session, while the pair found support in the 1.8100 area. Trading was less volatile during the US session as the pair traded in a 60 pip range. Retail sales grew in August at a monthly pace of 1.2%, much better than the analyst expectations of negative 0.4%. The pair has been making a series of higher highs and lower lows on the 1-hour chart. The Aussie traded just above the LFB R1 at 0.8020 after advancing 165 pips from the start of the new trading day in the European session. Trading was more subdued in New York as the range decreased to 80 pips with the weaker tone. The RBA released its monthly bulletin last night and stated that uncertainty in the markets was already highlighted by the volatility seen. Implied volatility for the month jumped 28.2%, which is the second highest reading in the past decade. A few months ago, the reading was at 11%. Traders also suspected that importers were protecting themselves through options to hedge risk. The Reserve Bank of Australia has been pumping large amounts of cash into the banking system, trying to ease the strains that have been caused by the spike in global interbank lending rates. The 4-hour chart shows that the Aussie is still in deep short mode against the dollar, and is not being helped by the collapsing global equity markets. The pair is starting to form a descending triangle, and as we know, these formations tend to break to the horizontal line. The loonie fell 120 pips from the start of the Asian session, but trading was sluggish until the European session got into full swing. This pair rarely moves during the overnight session, but recently the trend has not held. Furthermore, the last few trading days showed the pair had lost some of its correlation with the other majors. The pair moved up and down in New York as crude futures moved between gains and losses. In economic news, wholesale sales rose 2.3% in July to $46.2 billion as increases across the number of sectors contributed to a fifth consecutive monthly gain. Price effects were minimal in July as sales in volume terms rose 2.2%. What is there to really take away from this? The pair is very ugly with little direction. The Swissy tested the 20-day moving average in the European session but failed to break higher. The Swiss trade balance fell in August. Despite the global slowdown that should have reduced demand for Swiss-made goods, and for any exporting country in general, the Swiss trade balance reached a record high in the prior months. The main driver behind this surge was strong demand from the emerging economies in Asia. The Swiss National Bank held rates steady at 2.75%, saying that, in view of the major uncertainties relating to both the global economy and the fallout from the international financial crisis, the S&B considers that a prudent attitude is appropriate and that the current monetary policy course should be retained. A head and shoulders has started to form on the 4-hour Swissy chart. After a little bit more consolidation, these tend to signal a reversal. The yen advanced during the Asian session, despite the Nikkei posting losses. The pair advanced 100 pips, from which a large part of that came in just a few minutes of the European session. The pair declined about 55 pips in New York as traders sold risky positions when the equity markets fell. The Bank of Japan released its monthly report this morning with no great surprises. The Bank of Japan revealed the statistical analysis that was available at the time of the interest rate decision, which was announced on Tuesday night. The Japanese economy was described as sluggish, and private consumption was considered weak. The rate of growth of exports also diminished during the last period. The yen on the daily chart has lost all sense of direction. We will need to see 3 days of movement in the same direction in equity markets to get an idea of where the pair wants to head. On the upcoming economic calendar, there's, well, basically nothing of importance coming out tomorrow. This means that most pairs will be running on sentiment and sentiment alone. In Asian equities, the Nikkei fell 260 points or 2.22% to close at 11,489, erasing gains made during the last 4 years. The Australian S&P ASX fell 114 points or 2.43% to close at 4607. In European stocks, the German DAX gained 2 points or 0.04% to close at 5863, while the UK FTSE fell 32 points or 0.66% to close at 4880. In Wall Street, on Wednesday, stocks closed at a 3-year low as traders lost confidence in the financial sector, but at the close of Thursday's floor trading on the New York Stock Exchange, stocks had completely erased that loss. The Dow was at 11,010 after gaining 400 points or 3.78%. The S&P closed at 1202, up 46 points or 4%, while the Nasdaq finished trading at 2190 with a gain of 91 points or 4.35%. Crude oil for October delivery rose 65 cents or 0.7% to close at $97.81 a barrel. Gold futures for December delivery gained 46 points or 5.5% to close at $897 an ounce. In Treasuries, the yield on 10-year notes rose 10.3 basis points to 3.525%. The 2-year notes yield gained 9.6 basis points to 1.732%. Overall, the coordinated injections of capital by the major central banks played havoc with valuations and liquidity in the spot markets. Traders reported abnormally wide spreads and difficulties in placing orders. Complicating matters was the movement in U.S. equity markets, which swung wildly between gains and losses. In U.S. economic news, the Philadelphia Fed Index had its first positive reading since last November as demand for manufactured goods improved significantly, increasing 18 points to a positive reading of 5.6. The current employment index was virtually unchanged and remained slightly negative, but price pressures eased notably. There were 445,000 new unemployment claims, a decrease of 6,000 from the previous week's revised figure of 451,000. The 4-week moving average for continuing claims was 3.429 million, an increase of 36,000 from the preceding week. The index of leading economic indicators fell 0.5% in August as weakness in building permits and jobless claims were not offset by positive contributions from the yield curve and consumer expectations. The coincidence index also fell with a large negative contribution from industrial production. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.